All right, and now we move into our next session. Joining us, we will start off with Michael Caramagno, owner of Caramagno and Associates, a Chicago-based CPA firm that understands the challenges faced by businesses and their owners, and they provide all of their clients with proactive, customized service. And Michael will be speaking on financially managing your post-pandemic year. And thank you for joining us, Michael.
Hi, Andrew. Thanks for having me. I'd also like to thank the Edgewater Chamber for all the work they did to host this event and put together the valuable resources for the chamber members and small businesses in the area. We're going to be talking about managing your business in a post-pandemic environment from a financial perspective, as Andrew mentioned. Financials have taken on a greater importance now for small businesses. The days of managing based on your bank account are mostly in the past. Some people will still do it, but I think there's a lot more value to be added with financials. And many of the pandemic programs, which we'll sort of run through quickly since most of them have already closed. But a lot of people realized that when those programs opened, they needed financials in order to apply for them. So lots of different reasons for financial statements to be important. We're going to focus more on business considerations that came out of the pandemic, business considerations that should be revisited after the pandemic, and then some financial improvements and opportunities. So things that you can take proactive steps in your business to help growth, to give you better understanding, and to hopefully save you some time so that you can spend more time working on your business instead of, in your business. So we'll start off here with some of the federal programs that came out of COVID-19 tax bills that were passed over the past 15 months. The Paycheck Protection Program, I believe, is the most well-known and most popular program. There were two draws of these. There was the Paycheck Protection Program initial draw, which occurred very quickly into the pandemic, just a couple months in, about last April. Most banks were open and accepting applications for that. The second PPP round started earlier this year for most businesses and is still ongoing through the end of the month, although most funds have been dispersed. There are some funds, a small amount, that remain available if you're eligible to work through a community organization or a community bank. Those are specific targeted funds. And you'll see that some of these programs do have targeted funds, even if the main funds have expired. So the Economic Injury Disaster Loans, known as the EIDL, that was the second big program. Initially, those were $150,000 loans. More recently, some businesses have been eligible to increase those up to $500,000 loans. That outreach was done by the SBA directly. The EIDL advance was similar. It was $1,000 per employee, and there was a targeted advance that increased that number. But that outreach was also done directly by the SBA. So if you received some emails about either of those, it might be worth checking in and seeing whether there were opportunities for you to receive more funding. If you didn't, then the SBA has determined that you weren't eligible. Two of the newer programs, the Shuttered Venue Operator Grant and the Restaurant Revitalization Fund, we're not going to go into too much detail on either of those, but know that they're out there and mostly subscribed. The Restaurant Revitalization Fund specifically went very quickly. Again, like the PPP program and the EIDL, there are some earmarked funds for specific business sizes and or locations, depending on what area you're in. So might be worth looking into that if it applies to you and you haven't applied yet, but know that the window is pretty small for those currently. All right, so we're going to go through some new business considerations that came out of the pandemic, and not all of them are 100% new, but I think they're much stronger coming out of the pandemic here. And the first one is remote work, and we saw a big shift to remote work, and that obviously, it affects a lot of your operations, but it's going to affect individual finances for companies as well. Whether you have one employee or 100 employees, space for those employees to work and to work comfortably is expensive. And so, whether you're in a warehouse environment or an office environment, That's typically a big factor on an income statement for any business. So considering what size you need going forward is going to be very important. You look at potentially staying remote for part of the time. Many businesses are now considering a 3-day in-office work week and 2 days remote. Some are considering staying fully remote and leaving the office behind altogether. But whatever your business is considering, it's worth factoring that in to your financial statements, because you may need, if you are in 3 days a week, maybe you'll stagger your workforce and you'll need less space. So maybe you can take 50 or 60% of the space that you have now. And just when you need to have a full company meeting, maybe you rent a separate space that would, be a 1-day rental. But something to consider there, rent is typically a large expense. And if you can get that down, you can increase profitability. Client location has also expanded. So when you look at who you're targeting, or prospects that are available when you're building your budgets or your forecasts, you can see that with the access of clients online and Zoom meetings such as this, you can reach a much wider and diverse audience. And so if you were previously just a Chicago-based company, or maybe even more micro and just based in a specific neighborhood like Edgewater, this opens up the opportunity to expand your services geographically, especially if you're a professional service provider. My firm provides tax services for clients in about 25 different states. And we were using online services like Zoom and similar before the pandemic, but it definitely expanded. It expanded the use during the pandemic. People became much more comfortable with it, and I think it helped us to sell. And I think that's probably been pretty consistent, especially for professional service firms across locations. And then client service preferences. So, what I was just mentioning about clients becoming more comfortable with online services, I think I know we had examples in our client base where there were clients who said, I absolutely want to come in and see you in person and sit down and shake your hand. And the pandemic changed all that. And once they tried the online services, they sort of liked not having to fight traffic or get in their car or even leave their house, right? They could send us everything electronically, securely, and they could get on a video chat and talk to us this way. And it was close enough to in-person for them. The financial considerations there are going to be, obviously the cost of services. So you may not have rent expense that's as high, but you're going to have additional costs for the infrastructure that it takes to set up something like Zoom, or to have the bandwidth on your internet from your internet provider that is adequate to make sure that your video is streaming appropriately so that you don't have drops. Things like that should be part of the consideration. And then IT security, right? If you're accepting more things digitally, then make sure you're budgeting for those items. Increased security, firewalls, maybe an IT service provider that can provide ongoing protection, so that if a breach does occur, you're aware of it quickly and you can work to resolve it. We talked a little bit about expanded market access. So, geographically, you're going to get more access to people, and some industries are licensed in specific areas. But if you're not, you can expand your service and see what else is out there, and you may find that specific areas may not have the services that you provide, right? Maybe you're in an industry that is very niche, and there may be whole cities that don't have your services. And if you can locate those opportunities, the digital landscape allows you to more effectively monetize those. And then that leads us to new service lines. So many people had to adapt their business. And if you were one of the businesses that had to pivot and make changes, some of them significant, then something to keep in mind is whether you retain those services and just add back the old services you provided. We have some clients that do consulting for sales, for example. So they do sales consulting with large companies. And so they would do live in-person presentations, basically telling people how to add improv to their sales so that they felt more comfortable and they were more relaxed in front of clients. And it was a fun in-person experience, and they do it for groups of 15 to 150 people. What they found, though, obviously, was during the pandemic, they couldn't travel. So they couldn't go to these locations across the nation. So they switched to a digital format, and they started offering a few different teaching packages. They're going to continue offering those digital packages, and then they're also going to layer back on the in-person services. So it's effectively going to allow them to double their product offerings. And hopefully that will double their business. So there's definitely still going to be a demand that they can see for these digital offerings for people that maybe can't pay all the costs to fly out a full team of people. So it may expand their market access as well. So something to consider with the pandemic may have forced your hand at the beginning, but at the end, you may be able to leverage that into an advantage with a new service line that could generate significant revenue going forward. And then, as always, there's tax considerations when you make business changes. And so state nexus is a term that basically defines whether you have a presence in a state or not. And a presence meaning typically a tax liability or a tax filing requirement. And so for most businesses on this call, I would imagine you at the very least have an Illinois presence, and you may have presence in other states. But if your only presence is in Illinois, you probably file a federal tax return and an Illinois tax return. As you begin to work in other states, it's a consideration that you'll have to keep in mind, especially if you're a company that ships products. You're going to want to make sure that you understand what the rules of those states are, and what the trigger points are, what the thresholds are. A couple of years ago, there was a very famous sales tax case called Wayfair, and that changed the way a lot of sales tax was handled. And so there's now what's called an economic nexus threshold, meaning that you don't have to physically be present in the state, you just have to sell a certain amount of goods into the state. And for most states, that's $100,000. So if your business is selling more than $100,000 into a state that's not Illinois and that you're not filing taxes in, you should consider having a discussion with an accountant or with an attorney. And what we typically advise our clients is, hey, if you cross a border, we should have a conversation. And it might be a short one, might be 5 minutes, but it might be a longer one if we identify an issue. So something to keep in mind as you expand your business, just be wary of those requirements, be it tax requirements or licensing requirements, et cetera, as you expand into new jurisdictions. And then there's a few considerations that should be revisited in light of the pandemic. I think previously a lot of, both for personal and business, emergency funds, 3 to 6 months of emergency fund was considered adequate. And I think many people have seen through the pandemic that it's gone on much longer than that. And so the new recommendation seems to be 6 to 12 months. And that really depends on how your business adapted to the pandemic. So something to think about is, how you felt from a cash flow perspective during the pandemic, and what might be a good new baseline for your working capital in your business. And it's not to say that you have to increase your working capital tomorrow, right? We know that the pandemic has definitely depleted funds for a lot of people, and that's something that should be kept in mind. But setting a goal for yourself to work towards would be a great first step. And then just business continuity. There's been a lot of people affected by the pandemic who may have had to take long leaves of absences from their businesses or worse. And so something to consider is, what's the plan if you're incapacitated or unable to run your business? Do you have a backup plan? And if you don't, you should, think about what the implications are there. Does your business have enough cash on hand to hire someone to replace you? Or do you have a partnership with another business owner where you agree to take over each other's clients if something happens to one of you? But whatever the case may be, something to consider there. And then when we look at financial improvements and opportunities, I think budgeting and forecasting are two big things that small business owners don't do very often, but it could substantially improve their their business results. And it doesn't have to be fancy. You know, we look at a budget, and even if the first year you just take your tax return from last year and round the numbers off, and you know, maybe say you want to set a goal to increase your sales 10%. So put your sales 10% higher, and then use that budget to track against your actual results for the year and see where you come out. And then next year you can better define the budget. But just starting with something simple is a great way to get some metrics to compare to and to have a reason to look at your financials on a regular basis. And then the biggest thing we look at with clients is comparative reporting. And something to keep in mind due to the pandemic is that you want to look back to 2019 really to do your comparative financials, because 2020 is going to be odd for most businesses. You know, many businesses were shut down. Even if they weren't shut down, they were substantially disrupted. So the cadence of the business and the cyclical nature of the business, if there is one, was disrupted by the pandemic. And so going back to 2019 will give you a little bit more of a normalized look. If you're looking at bookkeeping software, Xero, Xero, does a great job of doing comparative financials, and they actually allow you to compare multiple periods. So you could run financial statements that would show your 2021 year to date compared to your 2020 and your 2019. So you could get that nice blend to look back. And things that we look at would be, you know, like what your current payroll is at, what your revenue is at, and compare those percentage wise. You know, is your revenue, gross revenue, on track compared to 2019 in 2021 year to date? So if you look at the first 5 months at the end of this month and you say, hey, you know, we're even with 2019 and we're ahead of 2020. That's great. Your business is rebounding and you're probably back on track. If you're below 2019, then you might want to consider, you know, the reasons why, and maybe you dig into some of them and you see, you know, maybe you lost a large customer, or maybe a customer delayed an order, or things like that. But it's a good starting point comparing those financials to previous years to see where you are in the current year and why it's different from prior years, so that you can, you know, take that information and adapt in the current year so that you can adjust and get that growth going forward. So those are some financial considerations for managing your business in a post-pandemic environment. Andrew, if we have any questions from the group here, I'd be happy to answer them now.
Thank you, Michael. I appreciate you taking your time to be with us this morning. We do have a few questions. Also, feel free to use the Q&A feature to ask any more. The first is, there's been a lot of tax changes in the past year. Do you expect more are going to be enacted by the end of this year?
Yeah, so there have been a lot of changes, and with the current infrastructure bills that are pending, there's probably going to be a significant number of additional changes. We see potential changes to the capital gains rate. We see significant changes, maybe not even to tax legislation, but to the IRS. The current plan that the Biden administration has released would double the number of IRS employees over the next 10 years. And that would allow them to focus on some of the areas that they haven't been able to dig into previously that have been ripe for exploitation, like cryptocurrency reporting, and some high net worth individuals. So it'll be interesting to see how they utilize those additional employees to collect revenue for the government.
Thank you. Question, are there any metrics that you focus on when analyzing financial statements for small businesses?
Yeah, it's a great question. We look at two things mainly. And so we look at revenue year over year, because I think that's an easy metric to say, okay, you know, this is a baseline of where we're at. And obviously, like I mentioned in the program, during the pandemic, I would probably compare to 2019 as well to get a more baseline for a complete year. And then the other one we look at is, especially with professional service firms, salary compared to revenue. And so, you know, professional service firms tend to have higher salaries. And so, you know, you want to make sure your salary stays in a reasonable range, because it's very easy to hire great people and, you know, pay them well. And then if the revenue is not coming, it can create big headaches down the road. So keeping that ratio, we typically see on On higher skill jobs, we typically see closer to 60% of gross revenue on the high end for professional services as far as wages. And on the lower end, we'd see 40%. So you want to stay somewhere in that range.
Excellent. And the last question I have, you had mentioned Xero. Is there other bookkeeping software that you recommend to a new business or an existing business to track their finances?
Yeah, I think Xero is probably our preferred option right now. I think they do a great job of combining ease and usability. There's obviously QuickBooks. QuickBooks Online is the dominant product in the area. They do a great job as well. I think they're a little less user-friendly and their reporting isn't quite as robust as Xero is, but they're both great options.
Excellent. All right, last call for questions. Okay. Well, thank you, Michael. I appreciate you taking your time to be with us this
Thanks,
morning.
Andrew.
Or this
Happy to be
afternoon.
here. Thank you.
Thank you.